The first one I wanted to start with today is when will mortgage rates go down? Because that's just what everyone is kind of asking right now, right? This is from Yahoo Finance. So Brian brought this one to the table. So when will mortgage rates go down and what to know about the future of mortgage rates? First of all, let's set the table. Mortgage rates are down comparatively to October 23 and to most of 2024, but it's not where everyone's sweet spot is. And I think that's kind of like the main thing here. But, what do you guys talk with people about? What are they asking you? What's happening because of our rate situation right now?
Yeah, I mean, for me, it's a lot of the conversations I'm having right now is geared towards prepping yourself to get pre-approved or really just know where you're at. And I think right now it's a perfect environment for people to test the waters, see what payments are looking like, see what they're approved for, or if they even can get approved. Now, act right now if you can afford it is what I am messaging for people. Act if you can afford it. Don't wait for rates to drop, because of what we've seen is that experts are saying rates are going to stay between the ranges of 6 to 7% throughout 2025, and waiting for a big drop might actually hinder your chances of buying a house if that's what you're looking after. For example, if a house right now is $600,000 at a 6.8 rate, and it could cost you about $630,000 next year, even if rates drop to, let's say, 6.2, you're really honestly playing the game of, am I going to save a couple $100, but my house is going to be more expensive than what it was last year? You're really not doing yourself, a huge savings there. So it's honestly, works for me backwards. If you're able to get in right now, when the rates drop, you'll be able to save a little bit more on your monthly payment rather than doing it the other way around.
And that's one of the things we talked about last week was like people who are willing to wait maybe for a better deal on the rate could miss out on the inventory that's higher now, but also deal and or contend with a higher price in the areas where prices are not being slashed, if you will, because it's like the whole sellers are bleeding. They got to slash prices. Slash prices is more of a regional thing happening, not happening everywhere. And then the national data shows that. So to your point, you might wait, but it might end up being the same exact monthly cost or even higher.
Yeah, I mean, you're betting on the rate to drop, but I mean, purchase prices are stabilizing. They're staying where they're at. So we're not really expecting house prices to drop. So that might, work in your favor.
Yeah, well, nobody has a crystal ball, right? I mean, experts are predicting a gradual interest rate reduction. Especially the Feds also announced that they may be considering that. We thought it may be happening in June, but now with all the new data that we have with the tariffs uncertainty with the market, I think it's going to prolong that process before we see, a rate reduction. Last year, I believe they mentioned they were going to do 2 for 2025.
Yeah, that was the idea. Was there's probably going to be 2 to 4. Obviously, we're not at the 4 place right now. 2 is still likely, even if they don't do one in June. But I don't know. But again, that's we've taught this for a long time here with our audience. Whatever the Fed does is not a direct correlation on the mortgage rate market. It's an indirect correlation because the sentiment and what they're doing and why they're doing it means something to the bond market and the mortgage-backed security market where the money's coming into for mortgages. So, I'm with you. I think it's going to be 2. I think that's all they have room for. I don't agree with that. I just think that's what they're going to do.
I mean, traders were saying we're going to experience at least 3, right? I don't know. What do you guys think about that?
I think we for sure will get 1. Depending on what data comes out throughout the year, we might get 2.
Yeah, I think it's going to be 2. I mean, and a couple episodes ago, we talked about whether, the wager of whether Jerome's going to make it to the end of his term in May of 26 or not. That's kind of an issue. And then there's some flip-flopping coming up, and I'll tell you more about that in the Fed article we're going to talk about. But there's some flip-flopping that they're doing, which doesn't make me feel very confident at all in what they're saying because they're trying to instill confidence. But the nature of them flip-flopping on some things actually makes me less confident.
Totally. But yeah, to Brian's point, the great thing about this gradual decrease in interest rate, it's going to put buyers in a better position. It will. Now, if they're ready, and I agree with you 100%, if they're ready right now, this is the time to strike. But it also depends on your circumstances, your situation of where you're at.
Yeah.
So those are things you have to explore, you have to really consider. But if you're in that position and you're looking for homes, a lot of times we want to stay within the city limits. Sometimes we have to go to the suburbs, just kind of go check out certain different areas. And I like that the article mentioned that because it brings a lot of, truth to it. I wanted, for instance, when I first bought my house, I wanted to stay within that area where my mom was, my brothers were at. But then I came to the East Lake, more of a suburb, realizing that there's other better schools. It's a better school district. It's newer community. They have what's called a PUD, planned unit development. And that brings, I know it brings additional property taxes. Like we have a Melrose, but I'll tell you the schools and the area, the new parks, the new schools, the new people that are coming around it really makes a difference.
Yeah.
And I think that's one of the points we were talking about last week, where it's like, the economy, we can't control it. We don't know what the Fed's going to do. We hope that they, move in the way that favors buyers, but we can't control, what the economy is going to do. Therefore, you can't chain yourself to, saying, hey, I'm not going to buy until the economy gets better. Well, hey, the economy gets worse and better every day.
Yeah.
So, it goes back to your periods of time. If you're in the period of time where, that house in that neighborhood suits your family's needs, or, that property near that house is, near the school zoning is where you need to be, then I think that's what you need to be focused on right now. Not necessarily about what the economy, what numbers are doing, because again, you can't control that, although it does, affect your daily lives. What you can't control is, what you're doing, where you're searching, and, how flexible you are.
Yeah.
Absolutely.
The thing that I said here, or that they asked, was like, should you wait to? Well, it wasn't really a question. They were just the lead into their point. Should you wait to buy until mortgage rates go down? And the answer is no, because of what we're talking about right now. And the question I wrote for myself is, do you want to have a house you like or a rate you like? Because if you get to pick one, which would you rather have? A rate that you like and a house you hate, or a house you like and a rate that you'll tolerate for the short term and then fix later sometime down the line?
Yeah, I do like it how it says right here. It actually says, should I wait to buy until mortgage rates drop? And it says, in short, no. It just freaking no, right? And it just says right here, the current housing market is in a crunch. To put it simply, buyers outnumber the homes for sale, especially in price ranges accessible to first-time home buyers. We're talking about, like, if you're looking, like in San Diego, if you're finding a home that's going to be between that 5 to 700, 800,000, there's a more pool of buyers that are qualified for that purchase price. Therefore, you're going to have that competition.
Yeah.
And we do see those things kind of going off the shelves. Even though the article also mentioned that homes are staying on the market in comparison to last year, 4 more days.
Yeah, that's not much.
Yeah.
That's not much, but this is the good time to go out there and really, as a buyer, really explore your options and see what you can get yourself into and see what you can negotiate.
And what we're seeing, again, on the data side, and this contradicts the sentiment, like we were talking about last week, a lot of sentiment talk, but the data, inventory is higher. Inventory is substantially higher this year than it was last year, and that's coming up later too. Yeah. But, knowing that inventory is higher this year than it was last year, and it's in that same trajectory, we're not having a less inventory on the market. It's just more and more and more keep coming. So that's for a variety of reasons, I'm sure. But if this is more competition, like you're saying on the demand side, that can be matched by some inventory. Maybe it doesn't get absorbed 1-to-1, but maybe your odds go from 5-to-1 to 4-to-1, and that's still working in your favor.
Yeah, and Andy, that's actually what's happening. If you look at the March sales, it was one of the lowest since 2009. That's just because it's telling you a lot of buyers are staying on the fence. They're just pretty much holding off. Let's just see what we're going to get. Are things going to really change? But with the whole forecast and the data that we've been seeing, and according to Uncle Powell, right, in his talks, he says, the main thing is the labor market. Our labor market is strong. Economic growth, I know we just saw our gross domestic products, the lowest that we had a month, lowest as we've seen in 2022. But now they're hoping that we should see a better quarter this coming up. And so if that's the fact, we could already see that rates, are going to pretty much just stabilize where they're at right now, which is better than last year. Last year, same time, we're talking about, the mid 7s. Yeah. Right now, we're in the high 6s.
Yeah. Even if they stabilize right now, I think that's better than going back up.
Absolutely.
And if they do go down, I think it's going to not only it's just going to favor the housing market. I guess that's the way I see it. It's only going to favor the housing market because, Brian and I were talking about inventory last week and how, if we were crossing the 4 million homes per year changing hands on the way down, it's going to be less and less and less. Okay, that's a big problem. And they tried to make it a big deal, and you kind of hit the nail on the head. I even brought my notes from last week because I was like, I'm going to talk about this today. When it said the pace of home sales slowest since March of 2029. We talked about that last week. And the problem with that is that it was statistically like not worth mentioning, but they mentioned it because they want the headline. Yeah. And we kind of railed about that. Or no, sorry, not we, more me. But I think that where this leads us is that if you can find a house that you qualify for and the payment is affordable for you and you're comfortable with it, go get the house. Yeah. Go get it. If the inventory is coming back and there's more inventory now than there was before in the region that you live in or you're looking to buy, there's no reason that you should be second guessing it because our odds, I'm saying, are that rates will stay or go down, not stay or go up.
Yeah. And one last thing for me is it says get curious. There's no better time to learn about your local market and real estate. So it's honestly pretty true. There's a lot of stuff happening in your backyard, and you'd be really surprised to see, what you're able to learn, what you're able to find out if you just tap into the right resources. And I think that right now it's all about, lining up the right information, not falling into paralysis by analysis, but actually taking action and making a plan that you're able to take those steps and you see yourself taking those steps without hesitation. I think right now it's the perfect time not to get greedy, but to really just prepare and stay ready.
No, that's great information. This article is a really good pick,
I really took a lot from it.
I like the way it broke everything down. It talked about even considering a fixer home, right? With the 203 FHA 203K. There's also for conventional. There's also for VA. A lot of them. The thing about that, they're not as common here in San Diego. It's because the time frame it takes for the person to go out there, get a contractor, see what the repair budget's going to be, et cetera. A lot of sellers aren't willing to wait, but there's these special programs out there that the cost for the rehabilitation of the property can be rolled into your loan as long as the property value appraises for that purchase price and in addition to the rehab cost, So I like that it broke that down. It says, rethink your commute. How many people, Brian, come on.
Yeah.
You're here. How many people have you gotten into a property that are stationed here in Point Loma?
That they live in Temecula. They'll live out of Hemet. It's probably like an hour 45. But, the thing is that they're okay with it. And as long as you're able to, hey, this is okay with me. I could do this. My buddy was driving his motorcycle up and down. So he's like, that's fine for me. I like riding my motorcycle. I enjoy the long rides. So in that point, it worked for them. And I think that's what you should be focusing on. What works for you? Not what works for everybody else, because it's going to be different. So what works for you right now, do that.
Exactly. It's so true. A lot of times we rather have the tendency of sacrificing and staying in a condo where, you have a family of 2-3 kids. I know it's not as common now, but most people will have 2-3 kids. They go into this place where they're cramped up. And, a lot of times is the father's going to go out there and work. And so it's like, I'll make that commute.
Yeah.
I'll make that commute and I'm okay with driving an hour to Riverside. And then they come home and it's like, look at this home, right? And sometimes you just take your shoes off, your jacket, and you're like, okay, I can enjoy this. So it's all worthwhile. And that's a lot of the feedback that we get from a lot of the people we represent.
You mentioning that literally just this past Friday, I was at one of my cousin's kid's birthday party, and I had a past client. They were actually friends with my cousin. So he bought out in Temecula, Murrieta area in 2021. And similar, they lived here in San Diego. He does medical sales. So he's driving all the time. He drives up to Arizona, Yuma, back and forth. So he said, hey, we want a house, but we can't afford here right now. He was just transitioning into that new job. He found something out there. And now he talked to me. He's like, hey, bro, I'm in a lot better position. My job's taking off. I actually started my own business, been filing my taxes for 2 years. He's like, now I want to buy here in San Diego. He's like, what are my options? So I was like, bro, I wish I could use you for a case study, because you literally went, sacrificed, had 2 kids while you were out there, came back, and now you're in a position to afford a property here, and you have the option of either selling your property for a profit or keeping it for a rental.
Wow.
So I'm like, dude, that's those are success stories that are there for you to take and utilize those examples.
Yeah. These are the kind of things that as I was reading this, it reminded me of different moments of our life where maybe one or some of these were also us. Like, consider a fixer-upper, or rethink your commute, or, go for condo first or townhome first. It's like when you're maybe younger, earlier in your career, earlier in your family life, maybe some of those things make more sense, or you can tolerate some of those, I'll say, inconveniences, but they're only as inconvenient as we wish to frame them in our perspective of our overall view. So I'd say take the long view in perspective, because at some point, all of us, more him and me, Brian, than you,
so I kind
have
of
considered,
I'm like,
hey, look at, maybe my commute's got to be a little different. And I'll tell you guys this, before we moved back to San Diego, we didn't own a home up in LA, but Jen drove from Long Beach all the way up to Paramount Studios in Hollywood because we wanted to move and live there. And we were living there because of the job I had before I came and started Mortgage Heroes with Tanya and Will. But we lived in Long Beach. She drove all the way up to Hollywood every day.
Every day, that's
crazy. It was an hour and a half, and it was 30 miles because it's just straight LA traffic the whole time. But
insane. While
we were younger, newly married, didn't have our first child yet, we're like, hey, we're willing to do these things because we love our weekends and our nights in Long Beach. And then I was driving to Newport to go to the job I had at the yacht company, and it was an easier drive, but it was that's the place that made sense for us financially. So financially it made sense for us to stay there, and then our commute just had to bear the burden of that, which, it ended up being Jen bearing the burden, but I was thinking about that.
Thank
And
you,
you know
John.
what? When we were younger, we did one of these or multiple of these. So
Well, you know, we have a bunch of clients that do that, Andy.
That's what I'm saying.
It just happens, you know. Murrieta having a winery country right there, it's a really good place. They have some of the best school districts, you know, for kids. It's
the
not a bad
Temecula
community.
Valley's a little hidden gem, dude.
Yeah, I
because
was just gonna say. I think before it was like,
our middle daughter Jill had her prom up there because the charter school she's part of is located up there. So a couple weeks ago on Friday, they had it at this like massive ranch where they do like weddings and weekend retreats and also I'm like, whoa. It's like off the 15, right?
Yeah.
But you get away and far enough away from the 15, you can't hear it, you can't see nothing. There's no light pollution, and you're out on this like beautiful rolling hills. And it's quiet, and they have like the lights on the driveway pulling up, and you're like, whoa, this is like a whole deal. Yeah. It was amazing. I was like, oh, I didn't know this was here.
Super cool, and everything comes out of sacrifice.
Yeah.
You know, the other thing I mentioned here is with the 7%, it says is 7% interest rate a high mortgage rate. Compared to historical mortgage rate, 7% isn't considered a high rate. And, you know, again, it all comes with sacrifice. When I first bought my house in 2000, we were at 8.75. Jesus. And when we saw that payment, I know the purchase price was $242. You can't compare. But at that point in time, the income was also not as high as it is now. So we also have to consider all that with the inflation factor.
but it was equivalent basically.
Pretty much.
Yeah.
It could be, right? But you have to do what you have to do. So at that point in time, the way we purchased that is one, it was our first time, so it was out of fear. How are we going to do the payment? But we figured out. All of a sudden, the world just revolved around us, it seemed like, because we managed, right? And then the rates went down, and we were able to refinance that thing. And it's like, hey, the following year and a half, we decided to buy another one. And then that same year, we decided to buy a condo in Petco Park. You know, it's like things become easier. You're less afraid to create the action behind it because now you understand the process. And that's a lot of times powerful. What kind of keeps people away. So with that said, I actually wrote a couple of questions, right? And so that we like to ask the audience. So one of the questions, if rates drop by just 0.5%, would that change your decision to buy this year?
Great question.
That's a good.
Great question.
You know?
You should be considering this.
Okay, what's the next one?
The next one is, are you seeing more homes pop up in your local market? So?
That's another good one.
I'm pretty sure you could drive down your street and you're gonna see some for sale signs. You're gonna see.
I've seen more up and down Crow Canyon actually. This last weekend, I was going to Bonita to drop off one of the girls. Like, wait a minute, I saw like 4 listing signs. There weren't 4 like 2 weeks ago.
Oh, also open house signs on corners of streets.
Yes,
if you see high activity open houses, your neighborhood is hot.
Yeah,
and that's your curiosity you mentioned earlier, right? Like, go in there, just check that out and see what it's all about.
What else?
My next question was, what's stopping you from buying right now? Rates, price, or uncertainty?
Ooh, that's a great question.
That's
a great question.
Uncertainty,
Price,
I think.
rate, and uncertainty.
Well, no,
right?
that's a great question because what underpins those is different.
Yeah.
Uncertainty could be economic uncertainty in general, or it could be like, I don't know what my life looks like. But like price could be like, oh, I just don't know, I can't afford mathematically.
Or,
like
it could be as simple as, is the process that complicated that keeps me away
sure,
from me?
Sure.
Because that's really uncertainty, and that was one of the big drawbacks for me when we were first looking. Like, I don't think.
And I'm saying more like head versus like hard numbers just aren't working out.
Yeah.
What about this one, guys? Would you rather buy now with more options or wait and risk higher competition?
Buy now with more leverage, more options in inventory. Or here's the thing, and I'm going to say this again from myself. If there's still a place on the market that is not listed, you can still go knock on the door and make an offer, just in case you were wondering.
Yeah. So here you go. And my last one is, if you could lock in today's rate but get a lower one in the future, would you jump on in?
The answer is yes. Yes.
100%.
Yeah. That's the thing. It's a great question because it answers itself. You can afford now, get the rate now, and know it's going to be lower later. Would you do it? Yeah,
a lot of times, the reason why I wanted to come up with the questions, because a lot of times we really have to ask ourselves these questions to really understand, where do we want to be?
Yeah.
And if you have those things, like they say, you have to do your affirmations, put them on the mirror so that you can put that into action and fruition, so that way it can come to you. Sometimes you have to do the same thing with questions. Answer your own questions. You get you out of that uncomfortable zone so you can go after it.
That's super good, man. That's really good. A great segment, guys.